Hey everyone, this is Target Miss, just giving you another update video and commentary on the week so far in trading and how the trades have gone so far, what I'm planning on doing for the rest of the week, and we'll even take a look at a certain YouTube channel, a different one than before. So this is the E-minis S&P futures contract. This is the most recent one, the March contract. And you can see last week we were playing it short. That worked out pretty nicely. Did take a short from up here down into here, closed it in there, reopened it in that area, expecting it to go down into 41.32 for the long stops. Algorithm would run them out. That did not happen until Monday of this week, when we gapped down and ran right through them. And you can see retail would be viewing this level as support. We've bounced from here 1, 2, 3, 4 times, and then we rode along it before we popped back up and then pushed down into this imbalance. And the thing that we talked about next was this imbalance here. This is key, because if we expect higher prices, then what we should see is price moving into this, and those who control the market, who control the algorithm, would be placing their longs in here. So you would get a strong reaction that would be very visible on the smaller time frames. This is the 5-minute chart. And you can see that we did get a reaction once, but take a look at the pattern of it. Each time you can see we come down, we pop back up to hunt longs, pop back down to hunt shorts. This wick down here wipes out any longs and then pops right back up to wipe out any shorts. This is what the algorithm does on a daily basis. That is all it does. It is either moving toward long stops, it is moving toward short stops, or it is consolidating and rebalancing price in an area of inefficiency, an area of imbalance, to prepare for the next move. And let's see. Yeah, we were expecting it, or rather watching it, to make sure and see that if we did get this kind of reaction from this level, this would be an area that we would want to long in. Taking a long there one day, mentioning the reaction. When we were consolidating in this chop, said there's no trades, no high probability trades in that. You can see my note. For longs to be viable for continued strong pumps, we want to see 40.80 to 4100 act as a barrier to hold up price. Just like you saw imbalances hold price down for that short trade Friday at 4200, we want to see the imbalance holding price up if we're going to expect it to run up. And it did do that. So you can see that I did take a short trade as well. It was a counter trend trade whenever we popped back up here to try to ride it down here, knowing that the algorithm is going to be pushing into this imbalance, hunting long stops before it moves up. And you can see that long trade from that area. Let's see. So yeah, overnight, NASDAQ posting lower lows while ES is not. What does it mean? If you answered down, you were right. This was from this pop-up up here, taking the short trade to write it down. Taking some off there. I didn't do this trade, but that would have been the play to short it when it goes down, and you can see it kind of holding in this area to take some off, 50% of the trade off, and then just hold some in case it does want to move down lower. Obviously, it did not. Well, it did end up coming back down after some time, but you can see it got a good reaction, a good bounce off that level, but still came back down. So this is the kind of things you need to be thinking about when you're trading. You need to get rid of this whole ridiculous retail concept that this is bulls and bears fighting it for control over the market. There is no such thing. The market is algorithmic. It is controlled by the central banks. And they are not on a bull or a bear side. They are on their side. That is why we expect them to stop hunt longs, to stop hunt shorts. They're doing this over and over every day, and it won't stop while they are taking price where it needs to go. Whether that's to the upside or to the downside, it doesn't really matter, because we are day traders. We want to be riding it in whatever direction it wants to go. I mean, it doesn't really matter, and there's no need to even concern yourself with where the market will be in 6 months or 12 months and such, you know. We just want to make money, and it doesn't matter if this market goes up or down. So there's the short trade 9 hours ago. That was this morning for this move. It was the short right from up here, and look, you can see the precision on it as well. Look at that, right from the top. How is that done? Because we know if we are expecting lower prices, that this area of imbalance should be holding price down. Just as well, you can see we stop hunted shorters up here. So we've already taken this out. So when we are up here, we are thinking, okay, it has no reason to go above here, because if it's going to go down, we've already taken this out. You can see that's why it kind of rides up here, doesn't touch it, down, back up, lower, drives down, comes back up, stop hunt shorters that are trying to ride a breakout traders that would be shorting from in here. Stop loss would be up there, comes back up, stop hunts them, drives down. That's where anyone who was longing this bounce would have their stop loss right below this. Comes down, takes them out, consolidates, chops, drives back up. Equal highs here. Remember, whenever you see relatively equal highs like this, this is going to be a target. The more of them there are, retail traders are viewing that as, oh, that's strong resistance. No, it's not. When you see that, that is a target for the algorithm. And you can see it takes them out, wipes them out. This was a news play on the speech, the Fed speech today. And what does price do? Well, before that, I'll just mention that I said that I was trading this morning, but once the speech started to hit, I was not going to take a trade unless we had a clear setup. You can see not trading it. This was posted right when the news hit. We started to get a strong green candle, and then it started to come back down. That's when I made this comment that they're going to run it up to the gap. The gap is right here. You can see it. This was the gap created on Sunday night when it gapped down, came back up but did not fill it. So there's still gap here left to be filled. So when I saw this kind of reaction, I know, okay, they're going to target that gap. And there it is. There's the gap being filled. And then you can see that I said I did not trade it, but if I was trading it, I would have longed it, closed it at the gap, and all of this extra up to 41.74, I would not have traded it. And you can see why I wouldn't have traded it, because we took out everyone who was shorting. We just dumped right down, again, below the low, stop hunting longers. And then what did we do? Boom. Launch. So, that is how the week has gone so far. I hope that has been insightful for you. As for my current trading plans, you can see there is a imbalance and a gap, or not a gap, but rather a fair value gap right here. So if we are expecting price to come down, we want to see this holding price down. However, from this sort of pattern, we did not get a strong reaction. We want to see a reaction like this. When we're looking for shorts or downside, we want to see price being pushed down and away. Just like for longs, we wanted to see price being pushed up. So far, we have not gotten that. So, while my bias is mostly neutral, at least from and the market just opened back up. So, we can watch it a bit, but unless we get a strong reaction off this, pushing price down, I would be expecting this to continue to chop up, potentially even pump up to stop hunt these two wicks right here. Once it does that, then it can drive up to higher targets. And if it does decide to do that, let's take a look. This is the 1 day now. We've already pushed up above these two highs right here. So you can see there is a gap right here, 42.65 to 42.74. This would be where they would be heading if they do want to continue pushing this up. So far, we have no signs that they want to stop. So a long trade, potentially when it comes down into these fresh new gaps down here, I believe that would be a good setup. Remember, we want to see a reaction and we want to see these imbalances holding price up. This is not retail support. There is no There's no bulls defending this area or anything like that. All it is the algorithm, if it intends to go up, it is not going to be coming down and going lower than this. Because if it's planning on going up, you don't want to give people the opportunity to long from down here and then get a boom insta-pump all the way up there, you know. That would be too easy. That would be too profitable for retail traders. You don't want that. So what you want to see is the price moving down into this, but refusing to break lower than this, and potentially even stop hunting some longers down here, but not breaking lower than these fresh new imbalances they've created. Because, again, if they plan to go up, they have no reason to come back down here, at least in the short term. If the plan in the short term is to take this up, they have no reason to come back down here. If they do plan on coming back down here, then we will see price being suppressed by these imbalances and order blocks, and we will see it starting to grind down, push down, and then pop back up a bit to give them a chance to reload, to stop hunt any late shorters, and then continue down. So usually the London and the Asian sessions are when I am not trading. I will be just doing real life things, watching price a bit and studying it in the morning, seeing how price behaved during those sessions, and then see what kind of trade setups we have. That's why you see I usually don't post trade setups during the overnight hours. It's always in the morning, because we aren't psychics. Like, I have no ability to just pull out a number and the market goes there. The way that we trade is we can see the algorithm tipping its hand to us. It is showing us where it's going to go. And very often, if not always, you want to be thinking, what are retail traders thinking when they see this? Because whatever they're thinking, the algorithm is going to do the opposite. So it uses their concepts of support, resistance, indicators, all of that. It uses that against them, because all of that shit is completely useless, and if anything, it is detrimental. So, anyway, that is what we'll be expecting for the rest of the week. And real quick, we will take a look at another YouTube channel. No comments, because interestingly, if you look, comments are turned off. And this person has almost 60,000 subscribers. And, you know, if you are a trader or you've been studying the markets and such, you would be thinking, oh, okay, well, this looks bad. This crash is coming. But look at their videos. They're posting about a crash almost every day, and they've been doing so for weeks. And here's the daily chart of SPY. They've been posting it was going to be a crash since 4,000. They've been posting it was going to be a crash since down here. And all we've been doing is going up. Everything is not a crash. Okay? You need to be able to look at the market with a neutral and unbiased perspective. And if you're always buying into this sensationalist garbage about a crash constantly, it's not profitable. It's not going to make you money as a trader. As a trader, you don't care if the market crashes. You are just there to trade and make money. If the market goes up, you want to be long. If it's going down, you want to be short. That's it. There is no need for these ridiculous, sensationalist YouTubers and people. And honestly, a lot of naive retail traders buy into this shit, this garbage. Okay? And if you're one of these people that is unable to get rid of your bias, just think about this, okay? Just look at the market. We've been going up and we've been going down, up and down. There's money to be made on both sides. But yet, you look at these videos, it's all about one direction. It's all about going down. That's it. It's ridiculous, and it's not going to help you make money. So, these kinds of sensationalist channels are just harmful and detrimental to retail traders. They have their comments turned off because they know they're full of shit, and there's absolutely no reason for you to subscribe to any of this stuff because the market has proven them wrong. The market is showing you evidence otherwise, okay? If we want to crash in a week or a month or a year, it doesn't matter. But while we are going up, you want to be long. And if the market wants to come down, we will get evidence of that and we will see it on the chart and then we can trade it. It's as simple as that. So, if you do have those kind of biases, I mean, it's okay to have a general bias of, okay, you know, in the short term, I think we're going up or I think we're going down. That's fine. But if every day you're saying we're going to go down, we're going to go down, we're going to go down, there's no way that you're making money. There's just no way, okay? Yeah, you would make money if you were right here and you said, oh, we're going down. We did. But if you're here and you're saying, oh, we're going down, we're going to crash, all we've been doing is going up. Yeah, we came back down here a bit, but that was simply fuel for the next leg up. And right now, we are getting the market structure, which is not the most important thing and such, but we do use market structure a bit. Market structure is not everything. It's not something that you can always trust and rely on, but it's still a component in your analysis. And right now, the market structure is pointing up. The imbalances and gaps that we are getting are pointing up. Yes, there's a lot of imbalances in red here. You can see that over the last year, we have all these red imbalances here. This is imbalanced price action, and it has ended up coming down while we're getting those on the daily chart. But right now on the daily chart, all we've been getting are green. Okay? That is, at the very least, a good sign for the markets. And if you look at the DXY and such as well, DXY is getting a bit of a bounce here, but even this does not, DXY does not look particularly strong here. I could see it running back up to here, which would coincide with a potential short trade on SPY, because if DXY goes up, we expect SPY to go down, and vice versa. So there is this big imbalance green right here. So DXY could simply be coming back down to reload, to push back up, in which case it could be timed pretty well with a move up for SPY and then a move down. But for now, DXY does not look particularly strong. It does not look like it did when it was down here and just going up and up and up constantly all of 2022, later half of 21, and during all of 22. You can see how strong it was. So we will need to wait and see for more on this, but right now there's nothing too convincing on DXY, and I've already given you my analysis on SPY. This is the CFD chart. This is the futures contract for SPY. So that is all. This has been Target Miss. I hope you've enjoyed this video, you've learned something, and as usual I will be posting on my community tab any updates or trades or anything I find interesting, and if there's something that is video worthy, then I will make an update on it. I would do one on the balance of the account, but you can see that we're already almost 900,000, and this challenge is almost complete. We were going 100,000 to 1 million, and we've almost done that. So, thanks for watching, and have a good night.